All right, welcome. Tom Hall here, and have a guest, a good friend of mine who's here in Pleasanton, Gina Piper. And so, if you introduce yourself.
Yeah, thank you. I'm Gina Piper with Elation Real Estate and very excited to be here.
So Gina runs one of the most successful residential real estate companies here in Pleasanton. We've known each other a long time. We've bought and sold houses together. We've done some investments together.
Yeah.
One of the most successful investments of my career, you were like lucky enough to be a part of. That was like crazy. Hollister.
Yeah. Oh, yes.
Yeah. I mean, we were like, we went into it like expecting one thing. And then when I was, it was kind of like one of those moments when I was like getting ready to tell everyone like how well we did. I was like, they're not even going to believe me. Right. You're like, what?
Yeah.
Like it was, so that was like a lot of fun to be a part of that. We've also been in Rotary together. Mm-hmm. It was kind of actually where we first met.
You brought me into Rotary.
That's right. Mm-hmm. I think I was in charge of membership that year, and someone had mentioned, they're like, it'd be really good if we get, Gina Piper in. And I was like, I think I saw her at like some wine bar or something like that.
No.
No, I know. She was hard to recruit because she, didn't want to, commit to something that you didn't do well in. So, but anyways, welcome. Let's talk a little bit about real estate.
Sure.
So, how has the last like 2 years been different than anything in your career?
Gosh, it'd be great if I had these questions beforehand.
Hey, you got it on your toes.
I love it, on my toes. So the last 2 years, most people's sales have come down, and that's been pretty consistent across the board.
Just as a company, your sales?
As a company, but across the board in all companies. Really,
all companies.
The sales have come
Total
down.
transaction volume is down. Mm-hmm. Same as my business. Like I think we're down 2/3.
Okay, so that's pretty on par with us as well.
Interesting. Okay.
Yeah, it is pretty interesting. I think 2021 got
but prices
so
didn't
nuts.
really go down.
No,
so why did sales not stay up?
Way less inventory.
But so people are just staying with their loans.
Yep.
Yeah.
Why sell?
Why sell?
And that's still a problem today. Is when you're in an interest rate of 2 or 3%. Why go anywhere? In fact, a huge part of my business this year have been estate sales. People that have died, their kids come in, call me, and say, we want to sell our parents' home. So that's interesting, right?
And when someone buys that, like, so let's say, for example, there's a house that, before $1.5 million, 3% interest only, it's like, oh, this is pretty affordable. Now It's like you go in and it's like 6.5%.
Yeah.
And and then the taxes are high, the insurance is high.
That's right.
How are people like they're having just a lot of cash down, or what's?
No, I am not experiencing that. I think that's a question I get a lot, especially with the higher end homes, is do you see a lot of cash offers? Yes, we see some, but it's not as much as one would think. Most people are putting 20% down on $2 and $3 million
and just having $25,000 a month mortgages.
Unbelievable. I know. It's unbelievable. I can't wrap my head around it, but that's what's happening.
Wow.
So certainly around here.
Yeah, that's crazy. I wonder. I mean, I know people make good living around here, but that's really a lot of money
commitment. Huge commitment.
I think maybe people are thinking rates are going to come down, I'll refinance, and so as you even probably see rates come down 100 basis points on that loan, they're probably refinancing immediately.
Absolutely.
It's like $22,000 a month.
And I think that's a good concept, is try to buy when rates are high, because
but the prices should have been lower.
They should have been, but wait till the rates go way down.
You think the prices are going back up quick?
Oh, it's going to get crazy again.
Really?
I think so.
Interesting.
I think so. Especially with lack of inventory. So lack of inventory and low rates
There's all this pent-up demand.
Chaos.
Because people probably are like, I have friends that are like, oh, I would have traded out. I would have moved somewhere differently. But every time I look at a house, they're like, I don't want to have a $15,000 a month mortgage, you know? And so you think the prices are, even though they're still high, are suppressed?
I wouldn't say suppressed, but I would say that when rates come down, I think it's going to be a craziness again.
Okay.
Now,
how much farther do you think they have to come down for like this?
Probably another full percent.
Full percent.
Or 1.5.
Because what is a 30-year mortgage going for
right around 6.
Right around 6.
Yeah.
That's what it was when I bought my first house back in like 2004.
Same with me. I think I was at 7.
Okay.
Yeah. So,
But it was also like a $400,000 house.
right. I was just going to say that was a good rate at the time.
Yeah, it
but,
was.
But put that together with pricing now, like what you're paying for a home, that's a big mortgage.
Yeah, it's one of the, like our big arguments why, renting is becoming so much more popular is because, apartment rents or renting a single family home, I mean, you compare that to that mortgage rate and then you look at not only that, but then the cost of property taxes, the cost of homeowner insurance, which is like quadrupled.
Right.
And then the cost of maintenance. I just, Allie was texting me because we had this little issue with our front gate. The guy replaced a battery and put a new keypad. It was $1,000.
Oh, good grief. Oh my gosh.
I was like, Allie, I think we got hustled. Yeah. So I went on Yelp. I was like 1 star. I was like, don't take advantage of people.
Yeah.
But in general, like things used to be $100, $200. And now I feel like anytime someone comes out, it's like $1,000.
It's so true. I'm shocked every time I go out to dinner.
Yeah.
Shocked.
Caesar salad, glass of wine, $100 bucks.
Unbelievable, truly.
And so I don't know how sustainable like that the cost being so high is. But
well, I think consumer debt is definitely at its highest right now. And this rate cut that happened yesterday, do you want to chat about that?
Yeah, I do.
I think that's a misconception for most people because they're going to believe that we're coming down 0.5%, and that's not the case. I mean, that is related to car loans and credit cards and that kind of thing, which is awesome. We need that, right?
But
we
it's
need
not
that
related
to stimulate
financing for housing because that's already been baked in.
Already baked in, and that's, our mortgage rates are tied to the 10-year treasury.
Exactly.
So I think most people don't know that. They're waiting for rates to come down, or sellers are saying my house is going to sell now because we just had a rate cut, and that's not the case. It was already baked in.
And I think that's the actual biggest misconception that people have when they talk about even like apartment buildings is it's all off 10-year treasuries, kind of like our kind of fundamental like rate we're tied to, and it's like that rate never went up as much as the long-term rate.
Yes.
So you saw, a short-term rate, sorry. So if the 10-year treasury would have met the same thing, we would have been having like 10% home loans.
Right.
Right. So that rate kind of stayed a little bit lower, and it's been anticipating rates to come back down like the whole time that rates have been higher. So I think you need, like you said, probably another 150 basis points to really start having an impact in rates.
I totally agree.
And to really start giving real relief.
Yeah.
Because
and stimulate the market and get people back into the market.
The 10-year treasury went up overnight.
Yeah.
Yeah. So it's like, okay, big ho hum,
Right,
it's like
right,
rates are
right.
still the same, for
exactly.
when it comes to like what we're doing. So
yeah.
Have you ever have you invested personally in residential real estate?
Yes.
In state or out of state?
Both. So I've owned in Hawaii. I've owned in Arizona. Neither do I own anymore.
Okay.
Only because I didn't belong there. I just didn't know what I was doing, and I was trying to manage it myself. Although I did live in Hawaii for a while.
You owned a house in Arizona?
In Arizona, yes.
And rented it?
And rented it out. Thankfully, I only owned it for 2 years, and I did well.
Oh, good.
But I'm glad I got out because right after I got out of it was the .com.
Oh,
bust.
this
so
is
that
a
worked
while
out
ago.
very well. Yeah.
Now Arizona's booming again.
Yeah. Maui didn't work out well for me at all.
Okay.
Yeah, I definitely lost a lot. Otherwise, my rental properties are here locally.
Okay. And do you positive cash flow on those? Or?
Yes.
Okay.
Yeah.
Have you owned them for a while?
I have owned them for a while, and I have 15-year mortgages on them.
Oh, wow. So
I've been focused on
paying
those off. Yeah. Even though I have low interest rates, it's almost silly to, but for me, I like being debt free. And the only debt I like is mortgage debt, but I don't even like mortgage debt. So those are almost paid off.
Yeah, because I was just thinking, because we were talking a little bit, I was like, oh, if I bought a rental property here in town Pleasanton, I was like, all right. So I was looking in the area we were talking about. I'm like, all right, $1.6 million. I was like, if I put $600,000 down, I was like, I still have $1 million mortgage, and I was like, man, that's like $60,000 a year, even if I'm just paying interest.
Right.
I was like, what's the rent?
Does that make sense? Yeah.
The rent is not $6,000 a month, right? It's probably like $5,000.
Yeah. Rents are high.
Are they? Like, what would
However, they mostly don't make sense right now.
They don't make sense right now.
I'm not telling my investors to buy right now.
You're not.
Mm-mm.
Okay.
And I don't see investors out there doing much.
They're not investors.
The knowledgeable investors are not doing a lot of investing right now.
Yeah.
But some of them will jump back in the market when the rates go down as well, which will be a flush of investors too that are waiting on the sidelines.
So what are a lot of those investors doing? Because I would say since the 2008 until now, I mean, there's been a heavy amount of investment in residential properties, flipping them, buying,
Lots of
holding,
flipping, yep.
getting a long-term rental strategy. So they just been on the sidelines for 2 years.
Sidelines, or they're looking at other avenues, like the kind of work that you're doing.
Yeah, investing in apartment buildings.
Maybe stock market stuff. It's hard to say. That for me, I've changed my focus because I was so focused on residential real estate, and I wasn't diverse.
Okay.
So that's when I loved having the opportunities that Greenleaf has. Like, okay, I'm diversifying. You know, and
thank you so much for. As I said the other day, I appreciate you guys having the trust and faith. But I think there's a lot of that, because I talk to a lot of people that are either in they have company stock, and so they're like 90% of my net worth is tied into the stock of the company I work at. I'm like, that's a very dangerous position.
For sure.
Like, what happens if the stock goes down? And then there's people, they know what they know, right? And so I think there's a little bit of kind of giving up control and faith into something else. But if you don't I'm the first one. I'm like, oh, I'll go buy residential, buy commercial, invest in the stock market, because I don't want to only be in my own business, or my own type of asset class.
Very true. And with residential investing, I think it depends on what your long-term goal is. If buying real estate right now in California, if you want to hold it, you never can lose.
Yeah.
You can never lose.
Because they just don't build enough housing here.
They don't. Yeah. And the value's always going to go up. I mean, it may do this, but it's going to
continue to
go up, right?
I know. Remember that house that I owned on Muirwood? And when we sold that, it was like $850,000. And I remember telling Allie, we lived in the house, we were moving, and I was like, we should never sell this house.
Yeah.
And she's like, we cannot have an $850,000 rental, right? And then I was like, yeah, that's a lot of money for a rental property, because you just don't, at the time, this was like 2014.
It was a lot.
It was a lot, right?
Yeah.
And then I think I went and looked on Zillow, and it's like worth like 1.4 million, and I'm just like, shit.
I know, but you got a tax benefit from doing it then.
True.
Right? Yeah.
I did. Yeah, that's true. So
So you have to weigh out those things. When I have sold, when I sell, I typically, instead of holding on to the house, I'll sell it.
Okay.
So that I can roll that over, I can buy the next house. And then if I want to buy an investment property, then I'll buy an investment property. So typically it doesn't make sense. And again, these are questions for accountants or tax attorneys, right?
Yeah.
But typically it doesn't make sense to move into another principal residence and not sell that and realize that.
Okay, that makes sense.
And not have to pay the taxes there.
It makes more sense to keep that principal residence kind of going, and then keep your investments on separately.
Yeah,
and
I
then
think so. At least
yeah.
That's my philosophy.
Yeah, no, it's interesting. So you started Elation. You used to be at Better Homes and Garden, right?
Yep.
And then you started your own brand, Elation. Tell me a little about the name.
Sure. Okay.
I mean, it does make you happy, Elation.
It does. Yeah, it does.
Is that
so? It was Shawnee Riverpants.
Okay.
He's the one that came up with the name. We went through all kinds of names for weeks and weeks, and we did process of elimination and got rid of all of them, and then we had a short list, and then all of a sudden one day Sean's like, "What about Elation Real Estate?" And we all just
Let's
freaked
go.
out. That's it. That's the one.
So I think the name of a company is such a hard thing, but then it really kind of captures who you guys are as a company. And so how does that name Elation translate into how you guys are as a brand, and what do you kind of
Sure. I would say in the company, culture is my number one for in the company. Outside of the company, I think
culture, so your internal culture as employees and working together.
Yep.
And so you guys, Elation for you guys means hey, let's show up and be happy to work every day and
definitely
be excited about what we're doing. And then how does that, and then you think that translates to the customer service?
I certainly do, based on all the things that we do in the community with our name being out there, the branding. I think
I'll never forget the first house, either I bought or sold, I can't remember which one it was, with you, that you made a donation on behalf of Allie and I's name. And I thought that was such a cool touch, because you knew how important giving back was to me. And so I always remembered that. I was like, wow, she took some of her own commission and just gave it back into something that meant something to me. And so I thought that was a really cool touch. Is that something that you had thought of as like, hey, this is a good thing to do, or just like, hey, I want to use my business to give back, is it both?
I would say both for sure. But for me, I always want to give back. That's a huge focus of mine because this community has given me so much. I owe it to give back to the community in some way, in any way, whatever that looks like. Like for you, that donation was made in the name of Rotary because that's what you were involved in. But maybe a different client is really involved in something else,
Value
right?
Humane,
So that's the direction that I'll go with a donation on their behalf. And I just think it's just so important.
Yeah, I think building, especially for your business, having a stronger and better community obviously is going to keep the real estate values, better, and, having that like feeling of community is something that makes Pleasanton such a special place. Pleasanton's changed a lot in the last 10 years.
It has.
I think I've like loved and been excited about a lot of the changes, but do you think that's like as you like think about markets and you think about California as a whole, how it's changed? Have you ever like saw another market that you're like, this is going to be like a fast growing area and where people are going to want to move to? Because I actually wouldn't have. I was so surprised how many people started moving to Pleasanton after never having moved here before, right? And it's like all of a sudden, all these people were like, we want to go to Pleasanton,
right.
And it was kind of like everyone knew it was nice, but never to the level that the demand kind of really exploded. So how do you kind of figure out maybe how that's going to happen, or have you seen anything that you think it's going to happen?
Not necessarily. I'll see trends like the trend of moving to Idaho. That was a huge trend.
Yeah,
right?
and you
3
saw
years
that ahead
ago.
of time.
At the beginning of it.
Yeah.
Now, of course, it's way too late. Don't
Yeah.
invest
Don't invest in Idaho.
Right? For sure.
Don't invest in Idaho right now.
Yeah.
But yeah, it's funny. Our friend, Brian Damiani, I remember he was like one of the first people I knew to move and to Idaho. And then all of a sudden, like I started hearing more and more talk about it. And then I actually, right after that, went and bought a building up there back in 2018, which ended up being like it was pretty early on in the investment cycle. So that's something I do. Like I kind of listen, you see what other people are doing. Where are people moving now?
Yeah. Typically out of this area, out of state.
But to where?
For tax reasons.
Yeah, tax reasons.
I'm seeing Montana, Texas is a big one.
Yeah.
Still Idaho, Washington, Oregon. Some people go. I've had a few clients in the Carolinas.
Interesting.
So pretty much all over, but a lot of them are during the pandemic. This blew everything up. That all trends.
Or
changed.
not.
All trends changed at that point because people were working from home, and so they had the opportunity to go work from wherever they wanted. So maybe their parents live in a different state, and they wanted to be closer to the parents.
Do you feel like that's now changing a little bit back to more normal?
For sure.
Yeah. So and then people are coming back. They're having to go to work. We've definitely noticed that in our buildings that were in more urban areas, that people are definitely having to go to work. And so before it was like, I don't want to be anywhere near the city center if I don't have to go to work there, right?
Yes.
They're just going to go out into some nice, so it was kind of interesting to see what people's real human nature would be. Was I don't necessarily, if I'm not having to work here and I can't go out and have a good time, like I want to go be outside and I want to be. So I thought that was interesting. And now you still see those same patterns, or are you seeing like people like moving to cities and other areas for like work?
Yeah, I am not seeing that. I'm still seeing people come into especially our area. The pandemic also, the trend was South Bay moved here.
Yes.
So many people from the
same
South Bay
things
moved
happening.
Here. Yeah, and I'm still seeing that.
Interesting.
A big majority of buyers in Pleasanton or Dublin and Santa Ramona are coming from the South Bay. And they're coming for schools, right? Schools, community, and they're willing to do the commute, but the commute maybe now is 3 or 4 days instead of 5 days.
Got it.
Right, so that makes it more palatable.
That does make it more palatable. So I kind of skipped over, but I did want to talk about go back to Elation and brand building, and what's one thing that when you started your company that's been like a biggest surprise to you?
I would say the growth. It's been 100% organic growth. I've never gone out and prospected and asked agents to come to the company.
Okay.
It's all been agents coming and asking, hey, can I join? And that I was not thinking that. I thought
You
we
thought
would
you were
keep
gonna
it
have to.
small. And
Oh,
if
you didn't even want to grow.
I wasn't even planning on going too big. I thought, let's just do this for a few years and keep it small and figure this out. And then I'll grow. Then, then I'll go out and prospect and grow the company. And it grew so fast. I mean, we were in a small space for, I think, less than a year, and already then had to move to the 2,300 square foot space. And
then you opened another office too, right?
Yep, in Danville. Mm-hmm.
Yeah.
Yeah. So that was a surprise to me, and it certainly felt good. It was nice that I had so many people come to me and say, I'd love to work for Elation. Now, with that was a lot of lessons, a lot of learning, a couple
Growth.
bad hires.
Oh.
And one bad hire can change the dynamic, can change the culture, and culture is my number one. That is the one thing I'm committed to our agents, is keeping the culture.
Yeah.
And that's such a big deal for me and for Elation. And so that's happened, and we learn from, thank God for mistakes, right? If you're not learning from them, you're not growing.
Exactly. It's funny when you mention the growth, and you didn't want to grow. You just wanted to go set up a small little company, do your own thing.
Sort of.
Yeah,
right. Sort of.
So maybe was it you were kind of like, oh, I'm afraid that I won't be successful?
I think I still wanted to focus on my business.
Okay.
Right. So I knew that a few people would follow.
Yes.
And I thought, instead of me going out and try to build the company right now, I still want to focus on my own business and my own clients and that
Yes.
sort of thing. And then when I, in a couple of years, when I feel like I want to start to slow down, I want to build the company to eventually, so I'm not doing all of that a
all
lot.
the production.
The agents
Yeah.
are. I am still doing the production.
Are you still the biggest producer in your office?
Yeah. And
So you had
it's not
everything.
working.
So you must be working a lot more then, if you have all these people and you're still the biggest producer in your office. You're like,
but I can't stop. I
Yeah.
thought that I would want to, but I can't. I love my clients. I don't market myself. I don't do postcards. I don't do anything like that. So
what is it that you love the most of it?
Because all the business that I get comes from personal referrals. It's either past clients or you saying, hey, Gina, my friend wants to buy or sell. And they, go to Gina Piper to
Yeah.
buy or sell. And that's where my business comes from. And those are the clients I want to work with. I don't really want the cold leads or the internet leads
Right.
or that sort of thing. I say no to those that come in and pass them along to agents in the office.
Interesting. So you thought you want to slow down, but you got to the point where you maybe could, and you're like, no, pedal to the metal.
It's when you have a personality like me or
Sean,
you.
how do you feel about this?
Sean
I know.
doesn't like it at all.
Sean doesn't like
Especially
it at all.
since
He
we
was
bought
like-
a place in Avalon. He's like,
I
let's
know.
go.
I think he was like, oh, yeah, we go down to our house, and Gina's working, and I'm just riding around in my little dune buggy waiting for her to be done.
Yeah.
I know.
Well, I've gone in phases like this. The first 10 years when I first started the business, for the first 10 years, I was so focused on success. I was so focused on being number one. I wanted to prove to the world, prove to my family, prove to myself. And I totally
Why?
had burnout, a lack of confidence.
Yeah.
I just, I got in the business at 21. I barely even knew what a mortgage was. I certainly didn't
Wow.
own my own house. I had a lot of debt. And I just wanted to prove to everyone.
That's a hell of a journey since 21.
Yeah, since
Yeah.
21. It's been a long time. And it's been a great journey. But after, I did make it to number one in the company and then in the company nationwide. And I started speaking across the states. And guess what? I wasn't happy.
No.
I was not happy. Money does not make you happy.
No.
It's not the end game. The money will flow if you're doing things that make you happy, if you're keeping your clients ahead of everything else, right? If that's when the money flows. And money was flowing, but I wasn't happy. So it wasn't the right combination. So I did something I call it my radical sabbatical. I left, I moved to Maui.
And this is part of your out-of-state real estate strategy.
That
But
was
see,
out of- that
But see,
was.
you weren't making that. That wasn't an investment. That was emotional. You're like,
Yes,
I'm going. I'm doing this.
I didn't live in the property that I bought.
Oh, you didn't?
No,
Okay.
I didn't. I bought them as investments. I bought 2 condos in downtown Lahaina. I did not live there. I lived in Lahaina, but I
Okay.
lived in a place I didn't own that faced the ocean.
So 10 years after becoming the top agent, making probably more money than you ever thought, doing things that you're like could never imagined, you realize that the dream that you set forth for yourself did not fulfill you.
Yep.
And then you went to the sabbatical. So I've actually never heard the story. So you went to the sabbatical, and what drove you to go back and do it again?
Well, I still wanted to do real estate, but I wanted to do it differently. And I knew I couldn't until I removed myself from here.
Okay.
And went somewhere to focus on me, to grow, to learn how to meditate, to learn how to be in the present moment. You know, being in the present moment is where joy comes
before,
from,
all
right?
you were just trying to be was, I got to be greater. I got to
100%.
get to the next
It was
thing.
drive.
Drive.
Yep.
And then it's like, get to the next level, get to the next
Yep.
level. And then you're like, oh, I'm here. Let's get to another one.
Right.
And then you get to
It
the
never
very top, and then
yeah.
you're like, well, what am I even
This
doing
is
here?
silly. Yeah, I'm not happy.
I'm not happy.
And I have no life. Like, so I'm not
So
spending time
living in the present
living in the present. Yeah.
is where happiness comes from.
It is. That's where the joy is, right? But it's probably my biggest challenge still. And it's something I'm constantly focused on. If you're in the future, that's worry.
But
if
would
you're,
you ever have gotten to this point where you can live in the present if you weren't so driven? Is always a question.
That's the biggest challenge. But
Yeah.
yes, I think you can.
You can.
Yeah, I think so.
But it's so hard, I think, when you're young, because you feel like the only way to get to there is to drive and go
So
up.
hard.
And so hard. And it's like, I always try to talk to my kids about this. Like, hey, I know you want to be great and I know you're so motivated, but you also have to be here
Yeah,
right
be
now
here now.
because you're not going to even appreciate all the things you accomplish, because you're just going to be like, I got to do the next thing. Now I got to,
It's so true.
got to
It's
go
so
here. I got to
true.
get a better job. And I'm like, then you forgot you didn't even enjoy being in college. Like,
Yeah.
and so
I hope your kids get that. And I hope that, I wish
it's
that
really
someone had
hard
said
to
that to me.
push through, though.
Sure.
More than I thought, because I went through something very similar to you. Like, I had wrote this down. I was like, hey, world,